Let's go.
Okay, so the example I start.
Before you start, I want to know, are we doing Fibonacci retracement or Fibonacci extension?
I did both.
Okay.
As a double confirmation.
Okay, very good.
So I started off just right here because I saw a reversal. So I drew my Fibonacci starting from this endpoint, and then I went through the first reversal here, and immediately I saw that I might have an entry point here because it reversed after reaching the green zone. So that's kind of where I stopped with the Fibonacci here, and then after that I used the extension tool and traced, starting off with this retracement here from here to here to see the historical move that it made.
From where to where? I didn't see your mouse move.
Like right here.
Okay, from there
to here.
Okay, so you wanted to see that, project that from this recent high.
Exactly, yeah, because I know my entry would be somewhere here after the decline.
The
reversal. So then I set it here, and the first one. Wait, is there a way to highlight which one it is?
Yeah, when you click on it, it kind of highlights it. So I think you're there.
I can't tell which box it is.
It's so you see how one is darker gray than the other?
Oh, I see.
The starting point is always where you ended, right? So it's that one.
Yep.
Yeah.
Okay, yep, it's this one. So then I drew that one, and it's telling me around here would be my exit after I enter up here.
Okay.
So then I retrace this one here, this move.
Okay, you projected that move instead of retracing. Yeah. Okay.
Yeah, I projected that move in the extension, and then it gave me hold on, this second big one.
Yeah.
And then I see a nice overlap in the middle here, and the same exit point here. And then lastly, I drew it as another confirmation, and one back here that's a bigger move, because these were kind of all continuous. So when I did the extension, it was way off from the other two because it wasn't that big of a move down, a leg down. So I went all the way back to here, this move.
Okay.
And then that gave me kind of similar area here. So I kind of have double confirmation from the fib and the extensions that I'll probably want to exit somewhere here. And looking at the actual what happened, it's pretty accurate.
Okay. So I think it's good. One thing to keep in mind, these are just kind of guardrails, guidelines to help you figure out when you enter, where should you consider exiting, right? There's always that I want to double my risk, but sometimes doubling your risk is so far away, and there are other things that tell you should get out sooner. Double the risk is the standard. That's what we would like to see. In this case, you've more than doubled the risk, which is beautiful. Because if you enter close to that last swing high, if you enter as close to that as possible, your stop is so tight that your exit, where those extensions are suggesting you exit, is going to give you that 2-to-1 reward to risks, which is fantastic. But sometimes that doesn't happen, right? So that's why we look at various possibilities. It's the support resistance we've been talking about, right? So this one is using a dynamic method to find support resistance. If you just humor us here, Nabi, and just draw some support lines, right? Draw some horizontal lines where you see support. And you'll find that some of those things align.
Yeah.
right? And for support, we mean where things touch multiple times over multiple periods, right? So if you kind of,
Yeah.
yeah, do
Enjoy this.
that, and then even on the higher side, as they were retracing back, you see, you know, some
Yeah.
entry points. So those, again, you'll find that your dynamic support resistance and those that you would draw normally, they come close together.
Yeah.
So with time, you'll get to trust these tools, but until you get there, don't forget to draw your support resistance because that's
Yeah.
very critical. That's key.
Yeah.
Yeah.
Okay.
Okay. So this was good. Again, this was not knowing an entry mechanism, right? So if I enter here, here's what I've seen for an exit. This is what you've been telling us, right, today?
Mm-hmm.
Which is good. Now, once you take that exit, what happens next, right? I think those are some of those things you need to also look at. Was there a re-entry? Was there an entry to the other side? Always keep that in mind because once you take an exit, you don't
Yeah.
shut down your computer and go away for a week or 2 weeks, right? You come back the very
Yeah.
next hour and say, "Hey, what's my next opportunity?"
Yeah. Okay.
Yeah.
That makes sense. So would you, is the entry point, are you aligned with that? Like it would be
Yeah, absolutely. Because you
this one
you
right here?
just touched that 38.2%, right?
Yeah.
So the first, uh, so that first line is where the red ends is 23.6, right? That line, the first retracement line is your 23.6, and then it goes to 38.2, and then it goes to 50%, right?
Yeah.
Is that what I'm seeing?
Yeah. So where
So
exactly would your entry point be, like specifically, if you were to do it?
so you see where it consolidated up above?
Yeah.
Yeah, and then the red bar, that bar right there, when that bar breaks the low of that consolidation, that's where I would enter.
Right here. Okay.
Yeah, somewhere,
Nice.
right? Because this is daily. On the hourly, you would see that consolidation. If you put a vertical line to know where that date is, and we
Yeah.
switch to the 1 hour chart, we'll be able to have a better view of that entry.
Yeah. Okay.
So, so let's go ahead and put that vertical line somewhere.
And that hourly?
No, no, just draw a vertical line right now.
Where?
Where that on that entry bar. No, not horizontal, like up and down.
Oh, vertical. Okay.
The higher. Yeah, that one. It says, yep,
Right here.
yep. And then now switch to 1 hour bar. Yeah, so that we can go back to find it the other way. Some more. Just scroll. Yeah.
Oh.
So now if you zoom out so we can see it clearer. Yeah, like that. So if you draw a support line right before that entry, yeah, yeah, right there,
Yeah.
but we're not seeing it. But it not to the right. You don't see it to the right, right? You have to draw it to the left.
Yeah. I was looking at these ones
Yeah,
when
it's
I
right
drew.
there. You should start right there because you don't see the other stuff to the right of that vertical line. You don't see, right? You have to assume you don't see that yet.
Yeah.
So your support line, you draw it before there, where that consolidation is happening. Support, support, support. When you break support is when you want to get in.
Okay.
And then right above that consolidation is your stop, and then your exit we just discussed a few minutes ago with your extensions.
Yeah. Okay.
Yeah.
Actually, now it looks a lot better too. When I moved to the entry point to that instead of this, and it's even a lot closer to what actually happened.
Yeah. So always remember this exercise. Once you identify your zones, always go to your pull the trigger chart.
Yeah.
The daily can be your pull the trigger chart, right? There's nothing wrong with that if that's what you want to do. But then your analysis, then you have to go to the higher time frame, right? You have to look at the weekly, and then on your daily, you pull the trigger chart, you come back and find your specific entries.
Entry point, yeah. Okay.
So either way, it's not wrong. Okay.
Okay. So what I try to do is I started with the monthly, and I drew my just the monthly chart. So let me actually. Okay, so what I try to do is I try to kind of set up my fibs in all the time frames. So I kind of start from the monthly and build my fibs for the monthly and where we are, starting from where we were at the pre-COVID lows. So I did that on the monthly. I did that on the weekly as well, going all the way down to the daily, and then finally the hourly. And then a lot of my actual entries and retracements and everything I did on, the hourly chart. So maybe let me start with that one. So I started right here. So I drew my fib, and I know it's a little cluttered right now. I try to just stop them because there's other drawings to the right of it. So I just started with this one right here. So this fib going on this upward move, and then this right here, it retraces to the just a little bit touching the 50%. And so I would essentially enter this right here on this second green inverse hammer bar. And then with that in mind, I went back and tried to say, okay, previously when it retraced this much, how much did it reverse to the upside? And I try to grab a couple of examples. This first one is right here. And then a few more as well right here. Let me click on it from here actually. So first actually it's a little unclear. Let me start with this one. The first one right here. So my exit would be right here based off this chart. And then the second one as well, they actually lined up pretty well to each other. So that's the first two right here.
Okay.
And then let me actually, as I go through, let me delete some of these so that it's a little clearer to see too. This is another one that I drew based off this move right here.
Yeah, so I would ignore the smaller ones because I'm not taking that entry.
Yeah, this one.
Right? If you're not planning to take that entry, then it doesn't serve you any purpose.
Yeah. Makes sense. And then lastly, this one right here, I think we talked about this one. So I'll go ahead and delete this one as well.
Yeah.
This one was also another one. So actually real quick before we move on from this, obviously right here, I retraced this move and then to the 50%, and then it retraced back and made a new high. One thing I kind of wanted to understand from you, like in this case, right, because it touched the 50%, right, and went below the 38.2. So I was thinking then you would redraw this, right, once you know what your rightmost anchor point is going to be. So, but I just wanted to confirm my assumption real quick before we move on.
So when that retracement, right, is from low to high, and then it retraces at 50%.
Yeah.
So where is that fib? I want to see that fib so I can show you.
It's this one.
It's that one there, right? So
yeah.
on that one there, your
Yeah.
question is, do you take the top and go to the next high, or do you move both the low and the high? Right? That's your question.
Yeah. So essentially what I did is I moved both the low and the high.
Yes.
But to make it easier for example and to save it, I just redrew it. But that's essentially what, redrawing this means. I just moved both anchor points right to the right.
Yeah. Yeah, that's how I do it, because once it gets past the 38.2, then
yeah,
it doesn't serve me the same purpose.
Yeah, exactly.
Yeah.
Okay. Let me delete these right here. And then I'll take this fib out too, since we're done with it now. The next entry point would be this one right here. So I would enter essentially on the downside.
Why would you enter on the downside? What tells you to enter on the downside?
You actually would not enter on this one because you never retrace to the green. It kind of just hovers above right around the 23.6, but it never actually it never goes between the green zone, right? The green to green is really where it shows us. So it's a lot of sideways movement right here. So you just kind of watch it. And then all of a sudden it touches the 38.2. And then, you're looking for your reversal so you can then enter back, but it just drops and actually just drops all the way past the 78.6. So you actually would just delete this and you wouldn't even enter right here. So essentially this fib is it's no longer valid, right? Because we broke the 78.6 and we actually had even a lower low than the previous low that we had here. So you wouldn't even enter anything here. You just delete this.
Yeah, I want to encourage you to ignore the green to green type of entries for now.
Okay.
Because that's anticipating a reversal, and it's a little bit quick, making that anticipation. If you don't have a follow through, right? If you're not doing a continuation entry, if you're trying to anticipate a reversal, you could get burned a lot of times. There's so many things you have to read and accept about that position before you enter it. So at the beginning, I don't encourage you to do what I call my green to green entries. I prefer you would ignore those at the beginning and only enter those continuation trades when you come to a pullback between above that 70%, and then you get that some sort of a candlestick or a chart pattern that says, hey, you should enter now. Then you would enter as a continuation instead of trying to enter a reversal. I know I talk about it a lot. I'm just preparing you for that eventuality. But initially, when you're taking your paper trades, I prefer you do not take those reversals. Reversals are the most difficult to enter.
Okay. Sounds good. And the last one I drew right here. So I just drew this fib from left to right. And then you get a pullback right here to the 61.8. And then so you would enter at this second bar right here. And this one is actually the hammer that we talked about last time, I think. And then looking at even
Where do you
where
see a
the
hammer?
right
I don't
here.
see a hammer.
This one? It's like a skinny hammer.
Nah, that's called a doji, not a hammer. A hammer really looks like a hammer. Like it has a big leg on one side. Like the
Oh, okay.
bottom wick is much taller than the top wick.
Kind of like this one.
Yeah, that's a hammer.
Oh, okay.
Yeah.
Okay. Then
The other
according
one
to
is
my
called a doji. I mean, that's also a doji means an indecision. Neither the bulls nor the bears had control during that hour, so both sides were kind of even. That's what a doji is. And a doji, an indecision, you can say, hey, when I break the high of that doji, I can enter, right? When I break the low of that doji, I can enter.
yeah, right
But
here.
we haven't talked about that. That's why, I wanted to mention it now. But that's not your hammer. If you look at the red bar to the left of that, like the couple of bars, that's an inverse hammer, because you can see that wick, right? It really looks like a hammer.
Yeah.
Yeah.
Okay.
But I want the hammer. Remember, if you go to the right, where you told me, is this a hammer, like that green bar? To me,
Yeah.
that's not an entry hammer. Why? Because it doesn't come at a pullback and says, hey, I'm terminating this pullback, I'm going up, right? This is a continuation bar, so I don't use that hammer as an entry.
Yeah.
Again, you could probably find some other method where somebody will tell you, yeah, you can use that as an entry. But for me, the way I use these hammers, like the hammers are the best entries for, in my opinion, for this fib retracement entries. You come back to a certain level above 70, preferably. Like if it comes down to 38 to 50 to 61.8, and then you get a hammer, but that hammer closes above the bar, but the wick is below it. That's a nice place where it says this is a strong support. It is having difficulty for the bears to go past this line. I get this hammer. At the minute I have a bar that breaks a penny above that hammer, I'm entering. Right? I just told you a good entry right now. Like that, really, I can repeat it if necessary, but this is a very, very good entry when you get a hammer like that.
Yeah. Okay. For this move right here, though, essentially what I would do is, once I breach the right here, I go retrace to the 61.8, and then I get the second green bar. This would be the next morning. As soon as I pass the previous one, previous high, so I would enter right here to the upside.
Yeah, but where's your exit? This is where I want to see exits now.
Yeah, I didn't draw the exit on this one because I had so many examples. I had a couple questions on this, kind of like the hammer, so I just didn't want to clutter the drawing on this one. But I didn't draw the extension on this one. But I can go to the other examples I have. I drew a bunch of others as well. Over here for the so starting with this one right here, I drew my fib going up to the upside and then enter right here. So if you enter right here, I look back at historical numbers. These two examples right here. The first one, zoom out a little bit more so you can see it.
Yeah.
This move to guess what's the retracement. So it said exit somewhere. I did another one similar right here, and then another one similar for this move. And they all kind of said, exit around the negative 0.72 and 0.45. So since all of them technically were above it, this would be a good area to exit. Obviously, you want to take the sooner play, right? Even though this the extension tool said historically it's gone up to this way, you'd want to kind of cash out here, and you can kind of see as well as after it reaches this point, it kind of there's a lot of sideways movement a little bit.
Yeah, it kind of fizzled, right? So it died. So if you scroll to the right, it eventually it reaches there.
Yeah,
but when you're you on the you're on the 1 hour bar. So when you're, let's say if you're doing options and you're playing weekly options maximum 2 weeks out, you also have to consider, do I have time on my side, or do I take everything at that negative 272? For me, the negative 272, if it's the first one before those extensions, I'm taking the exit. 50% of my position is out, right? At that negative 272.
Yeah.
So you have to take that into consideration. The next ones are bonuses. So, right, whatever is remaining, as you can see, it took a few days, right? You lost your money, and then it reached to those levels.
Yeah,
that's why you have to take your exits as quickly as you can.
Yeah.
Right? Take your exit as quickly as you can.
Yeah, exactly. So that's one example, and then we can keep going. Do you want me to keep going, Bing, or?
No, I mean, if you're good, we can go into other things.
Yeah, I think I'm, for now, I think I'm pretty good, yeah. But this is a really good practice. I think it helped me kind of solidify kind of the overall thought of how I want to approach it. Yeah. And then I think the biggest thing I was trying to focus on is also kind of trying to connect the dots between, what happens on the hourly, but of course, you do a lot of your planning on the daily, right? So I try to draw all of my charts, the hourly, the daily, the weekly, where it makes sense, so that I can get just a much more clearer view of what's happening across the board, and try to use the multi time frame analysis to kind of guide how I want to make my decisions in terms of entry and exits.
Yeah, that's good. That's exactly why I mentioned all those time frames, right? You start at the highest. What is my highest telling me, and are the rest of the time frames aligned with that, or are they going in opposite directions?
Yeah, exactly.
My ideal scenario is the monthly, the weekly, and the daily are all going in the same direction. The hourly is going in the opposite direction, because that tells me the hourly is in a pullback mode. I want to find that pullback termination so I can enter in the same direction as my daily, weekly, monthly. Right? So that's the ideal scenario. But when you start to think about reversals, you have to look at, hey, if everything else is starting to make lower highs, for example, then maybe I can play that downside until I'm convinced the downside is over. Okay, no, this is good. This is good.
Yeah.
So you can see my screen now.
Yeah.
This is what you were missing, so it's here.
Nice.
Okay, so let's kind of recap, right? What let's take something that we haven't done a lot of. So let's take diamonds. I think this is a good example, right? So you take your monthly. Your monthly is telling you, hey, I'm left to right. This is an uptrend. I'm in an uptrend, and so in an uptrend, where do I enter? What is happening? And you see that in the diamonds, we haven't even done a 50% retracement yet. So that's what we're looking at. When we're looking at the weekly, nothing changes. Right?
And tell us about your business and how it's working. Absolutely. So the unit economics.
Nothing changes. And so let's do this is monthly. So when we go to weekly, nothing has changed. We're starting to see some lower highs. This is what I was mentioning as you think about reversals. Again, I don't want you to focus on reversals yet. I want you to look at the positive side, meaning following that trend. We're in an uptrend. So when price came down to 38 to 23.6, if you got a signal, if you got a hammer, you take it. It comes down to 38.2, you get a hammer, you take it. It comes down below there again, trying to test the 50%. If you get a hammer, you take it. But when we say hammer, we go to our pull the trigger, right? Chart. We go to our hourly chart, and we see, okay, lots of consolidation here. When I break above that consolidation, I can enter. Right? That's because I didn't see a clear hammer. This kind of looks like a hammer. You can kind of trust it, or say if I break above this consolidation, I enter. Because you broke above it, you even tested it as support. Now it's no longer resistance, it's support. If you had missed this entry on the 21st of June, you would take it on the next day because price opened right below it and it had a hard time to continue to go down. So this tells you, okay, I'm going to the upside. That upside danced around for a while. It stays in this zone, it just danced around for a while. So this is where now we say, okay, where do I exit? Right, where do I exit? I've entered here, here's my stop, where do I exit? So we look at historical moves. Historically, if this was able to move this much, can it move that much from this low? Here's exit, one possibility of an exit. But we don't stop at one, we want to see a few. Because one is never enough, right? So they start to line up. And they start to line up. So what we're trying to say, we're not measuring this pullback. I heard you say this man is like measuring this pullback. I'm not measuring this pullback. What I'm measuring is in the past, after a pullback, how much did it move from that pullback, right? That's what I'm measuring. Past movement in the direction that I want to go. At this moment, I want to go up. So I'm measuring this upward movement. So upward, this is the zone that it tells me I need to get out. And you know how accurate this is. Once we got there, we came back down. This is the accuracy that you can trust. You don't have to know the chart. So here's an entry. So if we do this, and here we have an engulfing bar. So we'll talk about some different kinds of entries. The hammer being, for me, the hammer is the best one, but an engulfing bar, meaning the current bar engulfs the previous bar. It's below the previous bar, above the previous bar. This gives you a good entry. And now we measure. In the past, I'm seeing this move. Where should I exit? I've seen this move. Where should I exit, right? I'm only looking at recently, this chart, recently, what kind of move does it make? And I'm going to expect to make similar move. And you see, I am not showing you what's in the future here. And if we play this, we're reversing from that point. Yes, we went above it after that, but as soon as we touched that, we reversed. So hopefully you have taken some profits here, right? So that's a good indication. And then from analyzing support resistance, this is another area that you should exit. because that's your support resistance line, right? That's why earlier I mentioned draw your support resistance, because they will help you. You have your fib that hopefully you keep drawing. So we didn't go above 38, so we keep pushing this down, right? And when we know when price comes to this zone, it could reverse, right? So you were seeing we almost made equal highs, but then from there we're making lower highs. So we're preparing for that potential, right? If you remember, we're going in the same direction. So when it retraced to 23, we took an entry, but our entry was not that significant because it starts to drop again. So that's what we want to see, and we let it play out. You see, when we got to here, we dropped again. That's why it's very, very important to do all this measurements, right? Just keep checking them. You keep checking them. So this is today. So when you retraced to 23.6, you have seen it was not strong. It collapsed after that. When you retraced to your 38.2, again, you saw that they were not very strong because, yes, you pushed higher, but you get some weakness. And you can re-enter when price comes back down. You can re-enter because it's testing this support line. Now it's testing it, you re-enter, and then you keep drawing. You just keep measuring, right? So all you're doing is just measuring. It has gone this much. Where can I exit? Right there. Now, when I see this, and the next day instead of here, I jump up, I'm exiting. I'm not asking any questions. I see this big gap up, and it opened up here. I'm taking 100% of my profits, right? Because this is a nice exit right there. So that's why you just keep repeating that cycle. Nothing new, nothing different. All you're doing is just repeating the same process. Do we have an entry? Do we have an exit? That's all we're doing. So, any questions on this? Because now I want to start going into entries, right? How do we really pull the trigger? I want to get into that. But questions first.
It's just a good question. How did you, when you were drawing your fib, you clicked something and it had like the different options that came right away, like the daily, intraday. How did you pull that menu?
Okay, so in trading view, you can save drawing as template. So what I did was, once I drew on a monthly and I got happy with what happened? Where did it go? Okay. So when I drew my monthly fib, I did the settings and I said, hey, these are the ones that I want, and here's the kind of line that I am looking for. Then I saved it as a template.
Oh, okay.
And I just kept doing that for different templates.
Okay.
So I can just quickly flip and see what I.
Oh,
That's
nice.
what I did.
Okay.
Yeah.
Okay. It's a nice shortcut. Probably
Yes.
do that.
Yes. Not all platforms have this, so I like this one because it gives me that option. Okay.
Okay.
Anything else? Okay. Good. So now I think now that you guys understand what I look for before I enter, I'm looking for a lot of things to tell me it's time to enter, which is that dynamic support resistance from my Fibonacci's and some other zones that we will draw. I think remind me next week we should really talk about these supply and demand zones. Those are another set of almost dynamic support resistance lines that we will add to our tool belt. But what I'm really looking for when I enter a trade is in the direction that I want to go. Right? If I'm playing to the downside, I want to see the hourly go opposite direction of my entry. I want to go down, I want price to go up first because I want to find a better entry, right? That's what we've been talking about, this pullback, the Fibonacci. When I'm going to the downside, I want to see price retrace somewhere in this zone to go down to the downside. You hear me talk a lot about this green to green. By the way, Nabi, on your chart, your green starts to draw from here, but my green is always from here to here. It's past the 38.2, not past the 23.6. So just keep that in mind. So when I say green to green, it's not just for reversal, it's also for continuation. The sweet spot is when price retraces green to green, that's the best entry, even for continuation. Forget the reversals. For continuation, yes, 23.6 is good, 70 is good, 78.6 is good, but for me, my sweet spot is when price retraces between 38.2 and 61.8, I want to look for a good entry, right? So that's really the basis of our trading. That zigzag even talks about that. But instead of waiting for the low to break, I want to enter as quickly as possible. So what I look for is I just entered the green zone. I want to see an inverse hammer here. That's the best. Here's a very good inverse hammer, but it's in the middle. I'm not taking this trade here. I want this inverse hammer to happen here. I want when price initially, when we were doing this, I want that inverse hammer to happen here. This is almost like an inverse hammer. Not quite. Did I lose? I should have. Hold on, let me go back here. Yes, this one. Let's draw a vertical line. I want to show you a trick. Okay. Sometimes what you'll see is a combination of two candles will give you that pattern that you're looking for. It's not always just one candle that you want to look at. So I was hoping I would get it that these 2 hours would combine, but the previous 2 hours combined. So if I go to 4 hours, yeah, and I want this to combine, but it's not playing nice with me because this is the beginning of the day. That's why it's not combining it. But so again, my point is, if we look at this hammer, actually this is a good example to look at that. If we look at this hammer, let's take this guy out. And if we do 2 hours, for example, so it is no longer a hammer, right? So it combined these two to give you a good hammer when you're doing it in 2 hours. When you do 1 hour, very again, you see it when you're doing it on the hourly. It got a hammer, and then you combine these two again, you get a nice hammer. So this was not a good example because they both happen to be hammers, and even when you combine it, it's the same. But my point is, sometimes you want to look at two candles side by side and see, does it make a hammer for me? If we look at this 730 and 830 bars, maybe. I don't want to spend too much time on this, but this might be one example. I really want to. I'm trying to show you a good example of that. Yeah, so it combined the next two, so not really a good example again.
What about that one? I feel like that one, wouldn't that be a good example right there?
Which one?
It was right there, the just the previous bar from the one you have right there, yeah.
Yeah, so I'm trying to show you how a combination of two candles forms a hammer. This one here, if we go back to the 2 hour, right? Yeah, here's a hammer on the 2 hour, and this is the 630 to 830 bar, right? This is 2 hours combined. If we look at the 1 hour on that time frame, right there. So you have this plus this. This combination was a hammer. Or the combination of these three on a 3 hour bar is also a hammer. It's important. Why am I spending a little bit of time on that one? Is when you have, if we're playing to the downside, you have your pullback to a zone, and you want to look for an entry, right? So what are our entry bars? Let's just practice on 3 bars for now, right? So next time when we meet, when you talk about entries, 3 bars and one condition I'll give you, chart pattern. We'll just do those 4 for now. That's all we'll be practicing and all we'll be talking about moving forward for the next few weeks. 1, a hammer or an inverse hammer at the significance area, right? Area of value. So this retraced to 38.2. I want to enter. I'm looking for an inverse hammer because I'm going to the downside. Or I'm looking for an engulfing, meaning the current bar engulfs the previous bar completely. It takes out both the highs and lows. That's another entry. The third entry, the 2 bars are equal, but in opposite direction. One goes up, one comes down. So when you have those 2 bars come up, come down, that are equal, that's actually a hammer. When you combine those two, it's a hammer. If you start and end at the same place, the rest becomes a long wick, and so that's a hammer right there. So those are the 3 conditions: a hammer, inverse hammer, an engulfing, meaning it completely takes out the previous bar, both high and low, or railroad tracks, 2 bars in opposite direction about equal. When you get one of those 3 conditions, you pull the trigger. On the pattern side, when it's called a flag formation, this is your pole, price is going down is your pole, and then this is your flag. Right? This box here is your flag, and this is your pole. When you break outside of the flag, you enter your trade. So in this instance, there are 2 possibilities because this is the engulfing entry. So as soon as you take this out, this bar is where you enter. Or if we say we're going to enter outside of this box, this is where you enter. Either way, it's a right entry. You're not going to be penalized for either entry, right? Flag formation or the 3 candles. Any questions on the conditions to enter?
Yeah, I have a couple questions. So the
Okay.
flag formation, essentially that's just a consolidation area. Is that kind
Yes.
of what okay. And then the last condition you said, can you talk about an example for that again? That one's the only one I'm getting a little hung up on.
Railroad tracks.
Yeah.
Okay, let's find them. We need to find one. This is almost like a railroad track. So you see how this bar goes down, this bar goes up. If these two were equal, but you can see they're going in opposite direction.
Okay.
If this
The
happens
one's
at an
going up.
area of value, it must happen at an area of value. It's not random, right? So for me, I must see that up here. If I am expecting to enter continuation to the downside and price retraces to 38.2, and I see those equal bars, right? This is not exactly equal, but close enough for the explanation purpose. If I see those equal bars up here, I'm entering it at the break of the low of that bar. Does that make sense?
Okay. Yeah, it does.
When sometimes when you want it, it doesn't happen, right? It doesn't show up. I'm trying to find one for you.
I see that one right there. It's
This
on
one here?
Oh, that one or the next? That's the one at 9:30. On after the 5th. If you keep going to the right, keep going, keep going, keep going, keep going, keep going, keep going. You're almost there. Keep going, keep going.
These two.
Yeah, but I didn't consider that an area of value. So I wanted to look at.
Yes, I know, but as an example, right? So this is as
Yeah.
an example, these two, but you're talking about
Right
here.
there.
But here
What
I
about
don't
right
see. Right, I
Those
don't
two?
see railroad tracks though because nothing are equal, right? So here
I thought
maybe.
those two, yeah, right there.
Yeah, maybe roughly, right?
Yeah.
But usually what I want to see is no wick, right? The whole thing is just a rectangle, a solid rectangle on both sides. It starts low, goes high, the next bar starts at that high and comes back low. So those two start and end at the same place.
Okay.
Or they end and start at the same place when you're looking at the reverse side, right?
Okay.
Where the first one ends, the second one starts. Where the first one starts, the second one ends. So when you get that condition, both of them, that's a good entry. So if we treat this close enough, and if you're comfortable with this and say it's close enough, it's an area of value, I'm taking this entry, fantastic, take that entry. Because you've made a conscious decision and said this is close enough to my trigger. Right? It's not a guessing game. I just don't want you to guess, right? I just gave you, here are the conditions. Based on those conditions, we take our entries, right? Nothing else. It's just based on those conditions. As long as those conditions are met, we take our entries. That's all we're looking for is our conditions met. So when you have your fib retracement, you're at an area of value. I want somebody to tell me in this area, is there an entry? If yes, what is it?
Yes. That's the railroad tracks, right? Right there.
Okay, help me see them, but I like these two.
Yeah, those two right there.
Okay, so I think we should really clarify.
Okay.
We should really clarify. I think it's a good question because it's important to kind of talk about that. I want to see this, right? I want to see when price is coming to an area of value, I want to enter. When I say railroad tracks, if it's inside a consolidation, I don't consider it a railroad track. Right? I want the railroad tracks to pick out and be the only two bars that I see at this pick here. at this pick here or at this valley here. I don't want it to be inside that consolidation. It's not, remember, when I was talking about the hammer, I said it's not any random hammer. It has to be at an area of value and it has to stick out like a sore thumb. It has to stick out on its own. Otherwise, if it's in the middle of nowhere, to me, it has no meaning. It has a meaning to somebody who's trading at a much lower time frame, but to me, it has no meaning. So I don't want to look at it from that point of view. So, but it's good you asked that question because it's good to clarify. So here, I don't see any railroad tracks or an inverted hammer or an engulfing bar sticking out by itself. So the question still stands, do we have an entry? And where?
Would you draw the flag, I guess, at this point? Because this is a consolidation area. And then it would be the lowermost point, right, of the box. So it would be kind of the last, right below, essentially, the box at the next, I guess it will be the next day, right? Because that's at the end of the day. So where you open the next day, yeah, right there.
So this is your entry?
A little bit higher. Maybe you can enter like right as the day opens.
But this is where the day opens, is right here.
Yeah.
It doesn't open here. I don't know this, right? So it opens here.
Yeah, that's true. That's true because that happens enter the hour. Yeah.
Yes. So
that would.
So I'm just asking. I didn't say right or wrong, but I'm just asking. Is that where you would enter?
Based off what we talked about, I guess that would make sense to me, right?
Okay. Any other taker?
I didn't look at the other I'm just looking at it just purely from the three things we talked about. I didn't look at the fib as closely, so that's also another thing we need to look at because I would want to zoom out and see like how we're doing. Yeah. Yeah.
Maybe you any entries for you?
I don't specifically see one. I think if there was a reversal bar going below the prior low, then I would consider it, but I don't see one.
What's a reversal bar?
Like in that consolidation area.
Yeah.
That you pointed, I don't see a bar that goes lower than the previous low bar next to it as a confirmation for an entry.
So you want to see a bar here? Is this what you're missing? A bar here that's lower than this boxed area?
Yeah, because you're only asking that box, right? You're not asking anything lower than that.
Yeah. So price came down here. It reversed to this area, and if I were to do this. Let's just do this. This is the only thing that you see. Is there an entry? We're going to the downside.
Oh, then in that case, I say yes because I see the next declining bar that you have there, like that one bar, that gap down.
Just a second. I think we have an emergency. Just a second. Did you say you changed your answer?
Yeah.
So what's your answer?
My answer is I don't see an entry.
Okay, so tell me more.
I think since we already have confirmation that it's not like a continuous downtrend, we kind of have a reversal already at the prior low before that box. So now I don't see any reversal, that confirmation to enter to the downside.
So I'm confused by the word reversal. You keep using it and I'm not sure I understand what you mean by reversal.
Like I don't see it going back down after entering that the sweet spot, the zone.
Okay, so we're The idea is we're going to enter to the downside. It has retraced to the 50% and consolidated. And this bar just said, hey, I'm going to go down. So I'm not sure what you mean. You don't see a confirmation that it's going to go down.
Yeah, I guess I was considering the uptrend before that, like starting Wednesday, like another.
You're
If we consider
considering this uptrend?
on the hourly, I guess I was considering it, but zooming out.
Yeah, so we're on the hourly.
Yeah, sorry, I just meant like looking at that. I thought I would have considered it, but I could be very well wrong. It's just a guess.
So it's not about right or wrong, right? So let's put that aside. I think it's mainly trying to follow some basic rules for our entries. Our rules is we're just going to do a continuation. We're not going to do reversal, right?
Mm-hmm.
So right here, if you're going to play to the upside, you're doing reversal because this is on the downside.
Gotcha.
Right?
Okay.
If this is going down and you want to go to the upside, then you're saying, hey, I'm going to do a reversal trade. I don't want you to do reversal trades for now. Right?
Okay.
I want you to just focus on the upside. So
Gotcha.
because we've been making lower highs, if this has retraced, I'm not looking at anything before this bar. I'm just trying to emphasize how we find entries. And so in this downtrend, if we've reversed to the 50%, that's our area of value, correct?
Yeah.
We agree on that? And I think that was Manny was also saying we came to an area of values at 50%. We got a flag. When we break out of this flag is when we want to enter. Right?
Gotcha.
So a lot of times you'll see flags as part of a continuation. So they want to see a flag as price is going up, form a flag, break out of it. Or price is coming down, form a flag, break out of it. But in this case, we want to go down. Price was going up and formed a flag. And if it breaks below that flag, I'm content because my goal is to go to the downside anyway.
Gotcha.
The tricky part for you, Manny, was I had such a big gap. Do I enter anyway? I think that's a big question to answer. Do I enter anyway when I make a big gap? A lot of times I shy away from that.
Yeah, I would have probably used my extension tool to see like what's the historical, and then just make my judgment off that. Like, to say.
That's very good. That's what I was going to talk about. When you look at that extension tool, it becomes really handy.
Yeah.
Right? You see now I have two big areas that I can go after, but this one again is going to be another big area down here. So when you start to look at those, it gives you some help.
Yeah.
And so you see this down here, potentially, this is an area where I exit.
Yeah,
so do I take a chance from this entry to this stop, 753,
Jeez, yeah,
to make a potential of
it's pretty risky.
625? That's a decision you have to make.
Yeah.
It's not a wrong decision. It's just a decision you have to make.
Yeah, that makes sense. I wasn't really thinking about like the ROI in terms of risk.
Yeah, no, that's okay. That's okay. That's why it was a bit of a tricky question. But mainly is, if we're going to the downside, we got to an area of value. Here's a consolidation. Let's make a decision. We make a decision that says, I'm taking this trade because this happened, right? It fits the criteria. Or I'm skipping this trade because even though it fits the criteria, there's risk to reward is not what I want.
Yeah.
Right? So those are all valid things to do when you're entering a trade.
Makes sense.
Yeah.
I thought the trick question was the fact that you would have to enter the next day because it was the end of the day before. So I thought that maybe was the trick part,
Well,
because you can't really enter right at the end of it because
there's
you don't
nothing
really
to
have
enter, right? There's
yeah
no this. If this bar had given you an entry, yes, you can take it,
yeah exactly.
right? If this bar gave you an entry, you definitely should take it.
Mm,
You don't need to wait just because it's the end of the day. Because
mm.
if this was down here and you took it the very next day, look how much profit you just made, right?
I meant in terms of more the fact that you can't take it because it's still within that box, right? Because you
Yes.
kind of want it to be at the bottom of the box, so it actually gives you an entry point.
Yes.
And you want the bar to go below it, right? Because then you actually have an entry. Yeah, like that. Yeah, exactly.
Yeah. This is where the trend lines come in handy. This
Yeah.
is a type of a flag, a pennant. Flag pennant is the same thing, right? It doesn't always have to be a rectangle. It can also be a triangle like this, a pennant. So when you break below it, that's where you take your trade.
Yeah.
Right?
Unfortunately, on this
So
one, you didn't break until the next day, and it was way more down. So it's just kind of
yes,
risky.
yes.
Yeah.
You can take those trades, and if you just say, hey, you know what? If this wants to close the gap, and if you say, okay, if I understand where my gap is, and here's where it opens. So as soon as it opens, I draw this, and I say, I'm going to take this entry. I'm actually going to take this entry because I'm going to exit if price goes and closes this gap. I'm going to exit at 509. I'm not going to go all the way to 7.
Mm.
And if you do that, then your other exits that we talked about will start to make sense.
Yeah.
Right? So there's so many options that you have. I don't want you to enter a trade just because. I don't want you to skip a trade just because.
Mm.
That you really have to analyze what are my possibilities? Why would I skip a trade? That's where the journaling helps.
Mm.
Right? Whether you take or miss a trade, you should journal it, right? The trades you should have a separate journal, and for those that you skip intentionally, not those that you missed because you overslept, those don't count. Those that you saw a trigger and you skipped intentionally, you should journal.
Yeah.
This day I saw this and I skipped it because of this.
Mm.
If you keep skipping those trades 10 times and all those 10 times were winners, it will help you reassess. Okay, I should not skip those trades. It doesn't mean the 11s will work, but at least it will let you know you should not, you should reconsider them.
Yeah. Makes sense.
Yeah.
I was gonna say, I guess with that one, would you just take a lighter position in terms of your position size because you know of high risk involved with that trade because of the risk reward ratios? Like, it's just not
It's not 1 to 2.
because you want to double your money, right? Every
Yeah.
time you want double the risk
Yeah.
in terms of your profit potential.
Yeah. I mean, this one happens to have
Yeah,
worked,
it
but
happened
I
before.
don't usually do that, right?
Yeah.
See how it has really worked.
Yeah. That would have been a great trade, actually.
But the point is, when price comes to an area of value, how do you find an entry to take the trade? So here's a good example, Nabi. Here's a good example. Let's go here. So we know we're in an uptrend, and price has come to the 38.2% retracement. Right? This is where we want to enter. This is where we want to enter, but we put the trigger on the hourly. Did I just miss it? Okay, here. There you go. So price comes down to 38.2. It consolidates, right? I don't see any hammer. I see an inverted hammer, but I want to see a hammer. See how you see this hammer here? If we were like this, and I see this hammer, I'll say, okay, if I break above here, I will enter, but that break doesn't happen, right? Price keeps going down, so it doesn't happen. Then we're consolidating. So when we're consolidating like this, I want to see, okay, when I break above this box, like here, this is where I enter. It's slowly moving, but that has worked for a little bit.
How would you draw that box? Where would the box starting place would be? Just one more time.
So here, right, we got the hammer, but nothing happened. So my box is here.
Okay. Would it start at the top of the wick?
Okay, yeah, it's at the top of this wick. That's the highest point I have is this bar.
Okay. And how do you decide the bottom of the wick?
It's the bottom of this bar. I mean, it doesn't show it nicely, but that's.
Oh, okay. Nice. Okay. So it's the bottom of the
It's rough,
bar.
right? It's not 100% accurate. It's roughly this box.
Okay.
Right? If I see a close above it, I want to take that trade. That's basically what I'm saying. And then, I have my extensions that tell me, hey, where should you exit?
Yeah.
And I'll get different exits. And some are met. Now, you know how I said an inverse hammer is an entry? An inverse hammer is also an exit. So if your target is up here and price gives you an inverse hammer, you better exit. Because that's telling you I want to go lower. Like if the inverse hammer is in the middle of a consolidation, I wouldn't worry about it. But it's sticking out by itself, right? This whole line is sticking out by itself. Bulls came pushing, they couldn't reach your target, and then bear said, we're done. Right? So you better take your exit. So use them as another confirmation that you should exit. When, your prior moves have said, hey, I'm only going to move this much from this entry. Here's an exit anyway. So if you didn't take this exit, if you were hoping for this, big move, or let's make it a little bit more realistic and say if you were hoping for this big move, look how beautiful this is. Look where that inverse hammer is. It's saying if you didn't take your exit here, I'm going to take your money. These things are very, very accurate. They're extremely accurate. You just have to trust them, but you have to draw enough of them to understand.
Yeah.
Right? So if you didn't take your profit here and you were hoping up here, then you see this inverse hammer, that's your exit. Entry, hammer, inverse hammer, hammer to the upside, inverse hammer to the downside. Reverse those for an exit. Railroad tracks, whether you're up or down, doesn't matter, but they have to stick out by themselves, right? Just like you see this wick by itself, you have to see those railroad tracks by themselves to be an exit or an entry at an area of value. And engulfing, like this bar is engulfed by this bar completely. If this was at an area of value, that's where you take your entry. this is kind of tricky because it's close enough to an area of value. You might say, you know, here's my box. So I got this, but this is not good enough because it's not sticking out by itself, right? This is happening inside that consolidation zone. I want all my conditions to be sticking out by themselves. I want those two bars, in the case of railroad tracks or in the case of engulfing bar, I want those two bars to be the only bars in that area. Everything else is, you know, hovering above if it's coming down or below if it's going up. When it's sticking out like this, beautiful. I take my entry, I take my exit. Otherwise, I want to see a consolidation breaking, right? If this was broken, nothing happened. This didn't break, actually broke to the downside. You are protected, right? When you keep doing all these things, you're protected. That's the main part.
Nice.
And then, so if you have missed this entry or you took this entry, you took this exit, it's beautiful. Then you came down here. Price came to your area of value. Do we have, question. Never you first this time. I'm going to the upside. So condition to the upside, I've retraced to 38.2. This green zone is an acceptable area of value for me. My expectation is to go to the upside. Do I have an entry?
Yes,
Okay,
we
explain.
do. Because we see the hammer after the hollow one.
Where do you see the hammer? This one here?
The one after.
This one?
Yeah, that one. Yeah, no,
Okay,
like
so, okay, I'll let you finish and then I'll tell you what I think. So because we see that hammer, that's our entry.
yeah, can you zoom out a little bit so I can see the overall trend? Yeah, I think that's my,
Okay.
that's my answer.
So when I want to go to the upside, I want to see the hammer by itself like this. I don't want to see an inverted hammer. I want to see a hammer. Right?
What do you mean
So,
by itself?
like this.
On the reversal?
There's nothing to its left, nothing to its right. It's sitting there just by itself.
Oh, I see. Okay.
This hammer here is in the middle of that move. So there's bars to the left, bars to the right. It's not standing by itself, right? One. And two, it's inverted. When I'm going up, I don't trust an inverted hammer. There are people who trade inverted hammers, so I'm not saying it's wrong, right? But for me, for my style of trading, this one, it's in the middle of this move. It's not by itself, so that's not a hammer. Two, it's an inverted hammer in an uptrend. You see how this one is sticking out by itself and it's an inverted hammer? And when price went down, this is what I mean.
Yeah.
This is sticking out by itself and price went up, this is what I mean.
I see.
Here, it's in the middle. To me, this is no trade.
Okay.
Sorry, Manny, I should have asked you before I gave away what I thought. The reason is there's no trade is we did not meet any of the four conditions here.
Yeah.
And I am happy not taking this trade because it did not meet my condition. I didn't take it, right? Based on those four that I gave you. There are other things you can do to take a trade. But based on those four conditions for us for the next few weeks, those are the only conditions where we take a trade. There's no trade here. So you could take the trade here because you said, oh, I missed this one. I made a higher low with a hammer. I can take this trade. And you can take this trade here, right? You don't always have to take it here. You can take this trade. But that was the thing. So area of value. So now going to the upside again. Here's another tricky part. I think we have to really do this. So you have to see one thing. You have to see the whole picture. This low, this high, is much lower than this high. Therefore, here, when price is coming back to 23.6, I'm not taking this trade because we have failed to keep pushing to the upside. We're actually making lower highs. So I'm not taking this trade. Right? So keep that in mind, right? Just because we're in an area of value and we consolidate, right? We can say, hey, here's my consolidation area. I just broke out of it. Let me take this to the upside. You lose. Why do you lose? Because price is making lower highs. You have to keep that big picture perspective. Lower highs, continuously lower highs. Right? We don't just look at a narrow window. We look at the whole thing. So
would you enter that to the downside at all?
So we're avoiding reversals for now, right?
I guess, yeah, you're right.
But yes, because multiple times we're making lower highs, multiple times, right? So definitely you take this to the low side once we agree that it's time to go to the low side.
Yeah, but right now, because it was going up a little bit, it was going higher, and then all of a sudden reverse, so you wouldn't take that, right?
Yeah.
Okay, got it.
And now where we're sitting is we are near the 50%, but we are not at the 50%. If price came down to the 50%, I would consider it. If price had come down to here, I would consider it to go to the upside, because what we've done is we came down to 38.2 multiple times, right? Here, even here after going up here. This has failed to make new highs, but if it comes down here, I'll try it. At least I will know I'm going to target somewhere lower than this high, but still I'm going to target, I can take the trade because I'm at an area of value.
So why wouldn't you take that again? I'm just a little curious. After the last valley, why wouldn't you enter?
Why wouldn't I take it here?
Yeah.
Because it didn't come to the 50%.
But it doesn't have to come to the 50%, does it?
True. I kept seeing it. You see this trend line? I kept seeing this trend line. Remember, I don't know this.
Yeah.
This is all I know. So when it comes down here, I can take a trade assuming I will exit here, or I don't take the trade.
Yeah, you're saying
because I'm seeing lower highs.
Yeah, because I was in my mind, I'm like, you see it, lower high, it's like a continuation, it keeps going, and finally you get a valley, and it kind of not to the 50%, probably to what that would be like the 40 something percent.
Yeah, I don't
know
what that number is. I just say, hey, it's below here.
Yeah.
I'm making lower highs. It's probably going to go lower. That's what I'm going to assume when we get here. I'm assuming we're gonna go for this 50%, right here. It's when you have hindsight, you can make a lot of statements.
Yeah, okay.
But when you're like this, and you're seeing this lower highs, I'm assuming we're gonna go down here or the 61.8.
So you just wait until you get either between the 50 and the 60, essentially, to be a little bit more comfortable.
To be more comfortable.
Okay.
That's why sometimes you'll get it wrong, right? So I would have missed this, but that's fine.
I guess after all your experience, from your perspective, what's your what would you consider to be like at someone that has done this for a long time, like a good win percentage? Obviously, above 50%, you're making money, right? But I'm curious, like, from your perspective, like, what's a good ratio that we should keep in mind from a win trade or loss or gain?
So I'll give it to you not in a percentage, but in a different way.
Okay.
Remember I said journal all your trades?
Yeah.
So in 50 trades, are you at least $1 better than where you started? Right? In 50 trades. That's a winning rate right there. Then you make necessary adjustments because you've journaled to now make the next 20 trades make it be $2 better. Right? I'm simplifying it, but that's really how you should look at it. Don't try to get a percentage. Then it will be discouraging. Am I making more money than I am losing? That's the only thing I want to look at.
Okay. So you're saying essentially per 50 trades, you want to make just one more dollar. So you're essentially saying at least 50% win rate plus $1. Is that kind of how I understand
No,
it?
because some trades you'll exit early. Some of your
Yeah.
trades will go way beyond 2x. So it's not, you cannot really say 50% win rate.
I meant on average. Yeah, obviously, each trade will vary. Like sometimes you might lose 50%, otherwise you might gain to 75%. So
No. That's not what I mean. I don't mean like, I don't know if 50% of my trades are going to be winners. I might be profitable with only 30% win rate.
Yeah, because the win rate could be much more. I get what you mean.
Yes, right? So the percentage is really a very deceiving metric.
Yeah, that makes sense.
Yeah, that's why if you stick to the dollar and say, in 50 trades, am I better off than I was 50 trades ago? Right? Did my account size increase?
Yeah.
After 50 trades, then we make adjustments. In the next 50 trades, you want your account size to increase a little bit better than the last 50 trades. Right? To the point where you get comfortable to where that account size increase is the type of return that you're looking for.
Yeah.
That's why we keep doing this.
Okay. Makes sense.
Okay?
Yeah.
So let me give you some homework. We've gone way over today. Your homework is identify entries. Don't forget about exits. Identify entries. What I mean by identify entries, put everything we've learned so far together. And when you identify an entry, I don't want you to look at hindsight and make a decision. I want you to tell me this chart is going up, so I'm going to take an uptrend. And here's why I'm taking this trade. And here is the condition that I saw for an entry. There's only 4 conditions for an entry, so it's very simple.
Yeah.
And that has to come at an area of value. Again, very simple. Right? So by area of value, this down here, if let's just assume you want to go to the upside and this is somewhere between 23.6 and 38, it's okay to take this trade in the middle because this hammer is sticking out by itself. If this is all you see is this hammer and you getting close to this and say, if I break above this hammer, I'm taking this trade, take it. Right? Doesn't have to be exactly here, but it's an area of value. I know I'm going to take it to the upside, you take it. But if you're seeing lower highs and you get a hammer like this, that's why I said down here. Where was it? Yeah, that's why I said down here, I'm not taking the trade. You can say, but you missed out on this. Yes, but I also saved my account if this did not happen. I want to be very prescriptive where I take my trades, because nobody knows 100% of the time. So I want to be as close to stacking the odds in my favor as possible. So you cannot do it on any of these charts. Yeah, you have to do it on something brand new.
Which one? Which one we can't do?
The like spies, Qs, IWM,
Really?
stuff that we have
Okay.
done before. Just find a brand new stock that moves and just do it on that.
Okay. Sounds good. I have two more questions, Beanie. Is it okay if I ask them?
Yeah.
The first one, I just wanted to see, I think when you were drawing your fib, you had like a different setting, I think a different template for daily versus intraday. I just wanted to understand, what does that mean?
So
Like, why
for
would
me,
you
it just
have
helps me understand where I drew it. It's just to know. Like if I draw this, I'm on the daily chart, so I draw this.
Yeah.
Then I say, hey, this is a daily. So when I go to the hourly and I'm looking at this, I know, okay, this is the daily. Because I remember based on the template, I drew this on the daily. Just a reminder for myself.
What about the intraday? What does that mean? Just means you
But
draw.
it just tells me. So if I draw another one here, it just tells me I drew this one on the hourly chart.
Oh, okay. But this exact same thing, essentially.
Yeah, nothing changes for me. It's just the type of lines change to help me visualize and distinguish between did I draw this on the monthly or did I draw it on the hourly. That's the only purpose, right? So if that's not helpful to anyone, then you don't have to do that part, right? They can all be the same drawings.
Okay, makes sense.
Yeah.
And then my second question, I was looking at the SPY chart, and I was looking at the monthly, and I wanted to get your just general thoughts on it. Because I saw one of the things we were talking about kind of almost happening, and one of them is, if you could zoom in a little bit more, one, we're almost very close to the pre-COVID high, and then I also saw kind of a small upside after an area of value right below. See right there, like you said, right there, the last two bars, you see one big one and then kind of a hammer, and it's kind of a reversal after an area of value, or a move up after every area of value. Obviously, this is on a bigger time frame, monthly, but I think this is one of the things we were talking about. So do you think from here we might see some upward move, at least on the monthly chart?
So this hammer, to me, I neglect this hammer because I want to see this hammer down here. If I don't see it down here, I don't even look at this hammer.
Yeah, I didn't mean so much the hammer, but the fact that you just got, it was essentially went down, it retraced to the 50%, and then now it's bouncing back up.
So the way I talked about it on the hourly chart, that's really where I look at it.
Okay.
On the hourly, did I get this signal to go up? Because if you look on the monthly, we're still on a downtrend. I mean, overall we're in an uptrend, but this downtrend has not terminated because we keep making lower highs. Until we make higher high, we're still in a downtrend. Right? That's where we're struggling right now. We're staying here like this. This is happening here. So ideally, we will break out of this, test it, and do this. right? When I say tested is we don't break below it, we don't close below it, and we remain above it and keep going. Until that happens, this trend line is very much intact.
Yeah, okay.
Right? We've missed this move, 359 to 402. That's a big move we've missed.
Mm-hmm.
But I did not see anything that made me feel comfortable. When you're doing trades, so here. When you're doing like very short-term trades and you see, okay, I came to an area of value and I break above this bar, I'm going to take this trade. It does not meet our 4 conditions, so I'm only going to talk about those 4 conditions. But just for real quick here, if somebody said, look, I broke above this bar, I'm taking this entry, it doesn't make that person wrong because they have this stop and they're going for, for 2x, right? So a stop of 7, they want to make 14. And, they would be right. They've made that move has happened for them. But we've only talked about those 4. So based on those 4 conditions, I have no entry.
So you wouldn't consider that to be an inverse hammer right there?
This one?
Yeah.
Let's say I consider it an inverse hammer. Do I enter an inverse hammer to the upside?
I guess you entered to the downside. Yeah, you're right.
Yes,
Okay.
right? Plus, does this look like a hammer?
A little bit.
No, you're forcing it to look like a hammer.
Okay.
Right? Do not force it. A hammer is look at this one. This bar here, it's a clear inverse hammer. Right? You have a long handle and you have this small head. This is really a hammer. This, I don't know. This is maybe more like a spatula or something. Right? Yeah. Don't force those hammers.
Okay.
If they're not there, just because you have hindsight, don't force it. Because if this is what you see, that's not a hammer.
Okay. Sounds good.
Yeah. Yeah. Like, this is not, even to me, this is not a hammer because there's too much to this side.
Yeah, that one doesn't look like it.
Yeah.
Maybe the other one. If you go, it's what day is that? A little bit next to the 26, a little bit before. It's kind of by itself. A little bit before that. You just passed it. It's like in between.
Here,
right
this guy here?
That one, yeah.
Yeah. This one is an inverse hammer.
Yeah.
By itself, right? If you were going to the downside, this is where you would take it.
Yeah.
Again, because this is in an uptrend,
Yeah.
You got stopped out quickly.
Yeah.
Okay.
Okay.
We good?
Thanks, Pete. This is very helpful. Yeah. Today was a good lesson. Thanks for sticking around. It's almost 2 hours.
Yeah. I didn't
appreciate
realize. I enjoyed this so much I forget times.
Yeah, thanks, Vinny. Super
All
nice.
right. Take care.
زينا عم ترى سكوت عم بشبه